House prices have dropped by 1% nationwide in November, the smallest fall in over 5 months. An early sign that the housing market has already moved through the worst of the downturn, according to CoreLogic's value index. The speed of the decline has slowed in Sydney and Melbourne, with prices falling by 1.3% and 0.8% respectively. To give you an idea, just 3 months ago, Sydney house values were dropping by a rate of 2.3% per month, while Melbourne has eased from their peak of 1.5% monthly decline recorded in July. Tim Lawless, CoreLogic research director, described this as an early sign that we may have moved through the worst of the downturn. Yet, Tim Lawless did come out earlier in the year saying he foresaw the worst of the downturn happening later this year, with an eventual upswing happening next year. Mr. Lawless goes on saying that the initial shock of rising interest rates seem to have worn off, and we're starting to see a slowdown in rate hikes, and hopefully we're close to the peak of where rates will go. Alongside the fact that we haven't seen a material lift in listing numbers, and supply levels have kept relatively tight at a time when demand has drifted lower. Shane Oliver, AMP chief economist, said that the threat of rapid rate rises appears to have subsided, at least in the short term. Shane Oliver says we've probably seen the worst of it in terms of the speed of decline in house prices, and we're probably not going to see extreme rapid declines that we've seen in August, but prices are still expected to fall as interest rates continue to rise. Mr. Oliver says there's still a downside risk that the housing market has every chance of a re-acceleration depending on what happens with interest rates and inflation. This is where there's some silver lining. The Reserve Bank may not have to raise rates as high as expected after the Consumer Price Index inflationary numbers were released for October, showing a surprising slowing last month, though not enough to derail expectations for a rate rise in December. The monthly Consumer Price Index rose by 6.9% in October. It was widely expected for it to come in at 7.6%. which is down, so surprisingly down, and down from the previous month, which was 7.3%. Now, the main driver for this sharp downturn is food inflation, where we've seen prices for fruits and vegetables nearly halve, and data suggesting that inflation is about to peak. We saw earlier in the year ANZ forecasting that Sydney house prices were likely to have a peak to trough fall of 18%, Melbourne 16%, Brisbane 17%, and nationwide 18%. We've seen a recent report, the Boom Bust report by Lewis Christopher, saying that we actually might see an uptick in property values next year, which actually might see the peak to trough declines less than what's been expected and forecasted of the 18 to 17%. As we can see on the screen, Sydney so far has a 10.1% peak to trough, Melbourne 6.4%, Brisbane 6.1%, and Perth 0.8%. This brings us on to our next point at the moment. We're getting a lot of questions from our customers at the moment, and I thought I'd run through a few with Jaden and get some answers on this. We had one recently from Daniel who said, my wife and I just completed a build. We have a loan of $500,000. The home's valued between $800,000 and $850,000. We're currently on a standard variable rate and just wanting to get some advice if there's any other better variable loans I should be looking at, since now we're at a 60 to 70% lend. Jaden, what are your thoughts?
There is a lot of movement in the mortgage market at the moment, and we're seeing more and more that banks are giving the better discounts and the better rates to new customers to try and build and try and grow their market share. So in a lot of cases, it is worth reviewing your home loan, seeing what your rates are. And even with a lot of cases, like your customers you mentioned there, Nathan, we're seeing that some banks, even if you're able to get a 0.25 or a 0.5% difference, it can be $100, $200 a month difference for you. And it means if there's another rate rise potentially next year or next month, you might actually get ahead because you're going to a bank that's going to have a lower rate and you've got a free rate rise in the pocket. So it can definitely help looking at reviewing that. Nathan, I know there's a couple of other incentives as well, as far as cashbacks that can help with even covering, I guess, expenses or paying for renovations over this Christmas period.
There's a bunch of lenders giving anywhere from $2,000 to $6,000 cashbacks at the moment just to refinance your mortgage, which is absolutely insane. It covers all your costs of moving, which is only about $1,000 to move nowadays. And if you're getting a better rate, a lot of times people are jumping on the opportunity. We had another question from Mel who said, hi everyone, I just recently made an offer on a property and the vendor has accepted it. It's my first home. So I know rates are going to increase more and more soon, and I'm wanting to get advice on how to manage my home loan. Should I go variable with an offset account? Should I fix a whole lot? Should I split the loan? I'm borrowing $650,000. There's not going to be much savings left. Any advice would be greatly appreciated.
Fixed versus variable is tricky at the moment, purely because if we look back 12 months ago, the fixed rates were lower than the variable rates. So it was kind of a no-brainer fixing your rates, thinking, well, I'm going to pay less. I've got some stability there. And if the rates go up, at least I'm covered there. At the moment, it's the inverse, where the variable rates are currently lower and the fixed rates, say in a year's time or 2 years' time, are around 0.5% to a whole percent higher than the current variable rates, purely because the banks are saying, well, in maybe 1 year's time, the interest rate's going to be high. I sat down with a couple in a similar situation the other day. They'd bought a home. They said, well, we're worried about the interest rates going up. We feel like we would be pinched if the rates went up by another 0.5%, by another percent. I prefer to have some stability, not have to think about it for at least a year or two, because we're going to move in. The kids will get settled for school, and we need to do a couple of things. So in that case, we said, well, we can do half-half. You can do half variable. You can make extra payments. You can get ahead on your payments on that. And you can half fix. At least it gives you some stability there. And if the rates end up going up by 0.5%, if it goes up way more, you're not going to be too stressed and you can be comfortable for the next 12 months.
We had Tim ask, today I'm struggling with bad credit score. I want to get a home loan. Is there anyone that can help me out there?
Well, I had this very same situation with one of our clients, Jacob, last week. He contacted us. We were going to do a pre-approval, been saving, getting ready for everything, was really pumped. And as part of the process, we did a credit check just to make sure everything was okay. He was pretty shocked to find out he had a $30,000 American Express default on his credit file for a credit card he never even knew he had. Anyway, so Jacob looked into it, called American Express. Turns out he'd been the victim of identity fraud. So he had to go through the process, actually go to a credit repair agency to sort of refute the credit card, say, I never applied for it, get it removed, but it took a bit of time to get that sorted out. Tim, it could be the same situation there. It can be worth speaking to credit repair agencies. I've had even clients that have had defaults put on their file for electricity bills and different things over the years that the energy provider didn't follow the correct process, and they were able to actually get those defaults removed. So there's a lot of credit repair agencies. Check them out. One's called Credit Fix Solutions. Sometimes they actually won't charge you a fee unless they get the right result, but check it out. They're all different. And it could be a way of actually getting everything back on track, because the difference between sort of the regular banks to some of the non-bank lenders that are accepting of these defaults can be 1 or 2%. It can be a pretty big difference on your home loan repayments and your rates. So it's worth at least trying to go down that path and getting your credit file fixed before you sort of go down and look at some of those non-bank lenders. But otherwise, there are other options there, different lenders as they sort of go down the tiers, that it might cost you a little bit more for that home loan, but it means you're going to get in the market with your credit file how it is today.
We had Sarah say, hi, I just started a new full-time job in the same industry. I'm scheduled to have elective surgery in December 21st. I need approximately $20,000 for this. My hubby and I are planning to take out some equity and refinancing our loan, but I'm worried. I'm subject to 6 months probationary period, and I'm not sure on timing with regards to refinancing, getting the cash out to pay for my surgery. Does anyone have any advice or experience on whether I'll be able to refinance and withdraw the equity while I'm on probation?
You're taking out a loan to do elective surgery, so there's a couple other things there. So I won't talk about that directly, but as to the mechanics and is it possible? Absolutely. There's a lot of banks with your income, how it is, if you're on probation, pretty much as long as it's a full-time job. So full-time being where you get sort of sick leave, you get annual leave, and it's regular and consistent hours as opposed to sort of casual. There's banks out there that just need one pay slip that are fine with that. You can apply for a loan, you can get the top up, you can increase your loan for different purposes. Some people will even do it for weddings. This isn't financial advice, so you need to speak to someone about that. But as far as mechanics in a loan, it's absolutely possible in your current situation. If you do need any help with finance, Nathan and I are mortgage brokers at Hunter Galloway. We help home buyers and refinancers across Australia. So if you need any help, hit us up at huntergalloway.com.au. We'd love to help out. If you've got any questions, leave a comment below.